All right, let's go ahead and get started. Try not to get too close into the end of day, possible end of day moves, and it's going to be fairly short, right? We've done several um, webinars over the options depth gamma data that we've been using for over a year now, and so I'm not going to go over all the details and mechanics of all the individual aspects. I'm just going to go over again, some things that the heat map and the data tells us, and how that gives us edge in our intraday trading, and then one or two examples from the last week of really defined trade setups that we get just from purely from the data and the heat map. The first thing that the options depth data gives us, this gamma data gives us, is just the overall environment for the day, and that kind of what the landscape for the day is, based on the heat map and the zones, particularly the zones that we open up in. So on the regular trading session, when SPX opens, the zone that we open in tells us a lot, and we know even from pre-market. We always go over this in pre-market. We already know in pre-market we have a ton of information about what the potential roadmap for the day is going to be like, and there are very specific, roadmaps that, depending on what the environment is for that day, it tells us whether or not it's going to be, kind of a slower, choppy grind higher. Is it going to be a trend day with a strong magnet above us? Is it going to be a trend down day where every bounce is sold? And so, the number one thing that we know even before the market opens is, what's the general expectation for the day? Should I look to buy dips? Should I avoid shorting? And we're going to use the examples from the past 3 days, where the environment, before the market ever opens, has told us that every dip was going to be bought, and that we were going to get a trend day up every day this week, Monday, Tuesday, Wednesday. We said that, and we've talked about that in the morning call every day this week, and we've known that purely based on what the heat map from options depth is telling us before the market ever opens. And so the first thing we get from that is what's the overall environment likely to be, and what's the potential roadmap for whether or not, or if we're going to be pulled higher into a magnet where it's very, very difficult for the market to sell, and is any dips tend to get bought, and we know that ahead of time. The second thing that options depth tells us is, now, outside of the general, expectation and potential roadmap for the day, where are the actual areas where we might want to enter a trade, or where we might find potential areas where we might reject, where we might bounce? Where's a spot we might want to get long, and then where's a resistance where we might want to be selling into that? And so, you can see my screen here. I'm not going to get into all the details of every aspect of the screen. We've covered that in previous talks. But on the left is the gamma environment, with blue being positive gamma, and red being negative gamma. And then the black lines in between that is the dividing lines between those areas, which tend to be pivots that you can trade around. In the middle are the dealer positioning on a strike by strike basis for SPX. And this tells us whether or not dealers are long or short that strike, and the size of the positions at that strike, which basically can give us areas that can be potential support or resistance. Because as price moves in to especially larger positioning areas on these strikes, we know that dealers these are telling us that these are areas where dealers are going to hedge. So if price, moves lower into a very large positive node, like you can see at 7,000 here from above, it's likely to get a response where dealers are likely to buy the underlying in ES futures, which is going to cause a bounce. So we can expect that if we were to sell into 7,000 right now, there's a decent chance we would get a bounce. And then if it's these positive blue nodes above us, it's a potential area where dealers may hedge by selling the underlying. And so the individual strike by strike breakdown gives us some potential areas to trade against, and can be used as support and resistance. And then the section on the right is the charm layout. And that tells us, depending on what zone that we're in, if we're in the blue zone, everything in blue between the two black lines, that tells us that over time, dealers are passive buyers into the close in order to remain delta neutral as we get closer and closer into the close. Dealers are having to buy the underlying in order to remain delta neutral, which gives us some added information on whether or not dips are likely to be supported on a day like today. We can see that every dip is bought because dealers are passive buyers. And then the yellow section, the orange section, is areas where if price is trading within that zone, and specifically if we were to fail out of the blue zone into that zone, dealers would switch and would be passive sellers into the close, which is just one variable that can add to potential momentum to the downside. So if price is already selling and dealers are, and now we fall into an area where dealers are now passive sellers, that can increase some of the direction to the downside. So that's the gamma heat map. And again, the combination of the zones that we're trading in that we know we're going to open in can give us an idea before the market even opens on whether or not, like the past 3 days, we've known that really you don't want to try to short anything. Every dip is likely to be bought. And we've known that because of the combination of gamma and charm and some of the positive gamma positioning above us, that price is likely to be pulled into those. And we've closed at the highs uh, every day this week so far. So that's the things that the gamma can tell us. Now I'm just going to go into a couple of specific trade setups that we've traded in the last week or so, that actual defined setups where we've taken a trade entry because of something on the heat map. So let me change the day here, and I'm going to go back to Monday and Tuesday from this week, and just show again what it looks like before the open, and then kind of what that tells us, and how you're able to take a trade based off of that. Okay, so this is what the market looked like at the open, and we know based where on ES futures where ES is trading before the open, we know where we're going to open. So in this case, you can see that we on the right side of the screen we opened inside the blue zone, which is the supportive dealer zone, and on the left side we were going to open in a blue zone also, which is positive gamma. And we have this very large dark blue zone above us, which can be magnetic. And so we knew that opening in positive and supportive with a magnet above us, that this was likely to be a trend day into that magnet. And you could always reject the magnet later if you trade into it. But opening this roadmap before the market ever opened told us this was likely to move into that magnet. At the time was 6950, and we opened at 6900. And then let me fix this here. Get the strikes here to work. So then also you can see on this day in particular, we opened right above 6900, and you can see these positive gex nodes at 6900 were going to be supportive. So if we open in that zone, you know that 6900 is going to be support, and if you hold that, then you can move higher into names. If the market is likely to trend higher all day, then you don't want to be trying to short uh, individual weakness on individual names. You want to find the strong names and be long on those. Or if you're trading the indexes directly, then you want to be looking to buy dips into some of these strikes that have support, and not looking to short this. So this is what the heat map looked like on Tuesday. Monday was very, very similar, where we had that roadmap ahead of time, and then those specific strikes give us opportunities on areas where you could potentially get long for that move into 6950. I can show you Mondays very quickly. It looks very similar. So again, pretty similar. We opened in the blue supportive zone at the open, and we were on the left-hand side. You can see similarly that we were in the positive zone on the left side, which means that you're likely to be pulled into the gamma peak, which is this green line. And as the day went on, then those positive magnets kind of grew stronger overhead, and we were able to continue to trend up into those, and finally into that 6900 area, which was this blue area on the left by the end of the day. So it's very similar Monday and Tuesday. Those are good examples because a lot of people are probably trying to short this all day long. And whereas on the other, if we have this data, we know, before the market opens, we probably don't want to be trying to short this. We want to find a way to get long and to stay long and not try to fight. Something like this is very, very hard to fight when you have this combination, and just price continues to be pulled into the magnet above you. And anytime it does dip, those dips tend to be bought. So very, very hard to short this, especially if you're trading anything with premium. So again, even just the environment itself, without giving you a specific trade setup, can save you a lot of money, just to know that you probably don't want to be shorting anything on this day. So those are two examples of that specific roadmap that we had from this week, which is that trend day to the upside. Now let me show you a specific setup, which is the opposite setup. It's a really strong short setup that we actually got the week before. Let's see, I believe. Let me change the time here. So again, it's very important. The type of environment that you open in typically dictates most of what the day will be. So this is a totally different roadmap. In this case, we opened in a different environment that was negative gamma and a suppressive dealer environment. And what that means, you can see that we opened inside the yellow zone on the right and the orange red zone on the left. And this particular trade setup, if you open in that environment and you see a move to the upside into this black line, again, the black line is the dividing line where dealers are suppressive below, they're passive sellers below, and above that in the blue zone would mean that dealers would flip to being passive buyers into the close. But if you open in the suppressive zone, typically it's very difficult to change the environment that you open in. It can happen, it's just more rare. So if you open in a suppressive zone and you move higher into this line tends to be a rejection point. And the benefit of this is, specifically here, I believe later in the day was when we actually took this setup, when we got the hard test of this line. So you know that if you open below this line and you make a move into it, that's a very, very strong chance of a rejection where you can have a very, very defined entry shorting against that line, expecting a rejection, and your stop can be fairly tight right above that line. And the thing about gamma, that specifically the data from options depth, is so good, that there's literally zero drawdown on this. And that's the way most of the trades go. If you're expecting a bounce or a rejection, typically it bounces precisely at this line. And this tells us exactly where price is likely to reject. This was a fairly strong move to the upside, and just to the tick, we hit this rejection point. We went short here at this spot, and you get, let's see, about 20 points, direct move to the downside. And the benefit of this is that if you go short at this line, you expect it to reject, but also because you're in a suppressive zone, as it starts to move lower, dealers are passive sellers, which is adding some of that momentum to the downside. And it's just an incredible edge to be able to have something that tells you this down to the very tick is likely the spot where we're going to reject. And you can take a short right at that spot. You can use a 4-point stop, and get 20 points straight with zero drawdown on a 4-point stop. And so just having data that's so accurate, and even this was not even a line that I had on my chart. A lot of times it does line up with our own charting levels, but this is so powerful that this is something that's not even on my chart at the time. But this is telling me that at this point, dealers are likely to respond by selling. So we're likely to reject this, and so just an incredible edge. Very, very high win rate. This is the highest win rate short setup that we have in the playbook of using the options depth data. And it's got a win rate of 85, 90 plus percent and almost zero drawdown on almost all of them. So it does allow you to really have a great risk reward, which is very beneficial. So just a great example of being able to have identify an area through this data, and we see bounces on the flip side like this all the time. Also, this is just an example of a rejection or a short setup, but having something that's telling you at this spot down to the point is likely a spot where we're going to reject, or having that same thing sometimes on these long setups where we know that there's a very very heavy positioning at a certain strike on SPX and sell into that. It's a very very high chance that we're going to get a bounce there, and you can take a long, risking relatively small stop below that spot, and how accurate it is that will bounce exactly from that spot. I've seen it hundreds and hundreds of times over the last year and a half, where the data that it's giving us tells us exactly where there's very very high probability bounces or rejections. So if you're trading, I use it to trade ES. You can trade it with SPX options. There's a lot of different ways you can use it. But having something that's so accurate, such a high probability setup with a relatively small stop and good risk reward is just extremely valuable. And I can't overspeak about how impressive it's been just to continue to see these setups play out so well with such precision. Over almost 18 months of watching it, and it's not just a runner, a rare thing. I mean, this I see this every day in different environments. So, very very powerful tool to have. And like Space Monkey mentioned earlier, often whenever we get a setup like this, usually we'll hit this, we'll reject and start to sell, and then MonkeyBot will signal short soon afterwards. And so MonkeyBot a lot of times is a nice confirmation where MonkeyBot is also picking up on what's happening on some of the market internals, and it knows also that the things that are happening underneath the hood where we're about to sell also. So typically those two things pair up extremely extremely well. And if not every time, 95% of the time where there's a gamma setup, MonkeyBot also signals some form of confirmation at those spots. Also, if not, sometimes it signals before, and then sometimes it signals afterwards. All right, so that's a really good example of a short setup that we had recently. Again, we see these different setups almost every day, and often throughout the week. But I'm going to scroll through and check some of the questions from the chat and catch up on some of that. I haven't been able to look at that, so I'm going to look at that. And if you have any questions that you haven't posted, we can do that. And I'm also going to switch the screen back to the current live data. I have no idea. Who knows what's happened in the meantime here? Okay, so I'm going to look through the chat. Feel free to put any questions in there if you have any. Okay, yeah. So gamma can be, again, this is something where I've watched every second of gamma, for the last 18 months, and what I've done is make it as simple as possible to say, okay, this is a very complex subject, but what's the most simple and defined way that I can just use this to know where to take a trade, or how to approach a day? And so we do have a membership to a partnership with Options Depth, where you can have a subscription to Options Depth as well as bundle that with the TWI Pro membership. And with that, we've taken Matei and I have combined and then worked on to try to simplify all of the information on gamma into something that's very simplified and actionable, that has a little bit better idea of getting into some of the more complex details of gamma in a playbook. And so that's something that we do have, and then in that membership also. And I typically review gamma almost every day in the futures recap, just because it's something that I use every day while trading futures. And I do a lot of teaching on different gamma concepts and how I knew something based on the data, what the data was telling me. And so we have the playbook. I do a lot of teaching on that in the ES recaps for futures. There's several videos that we have on our YouTube about gamma, and it does take a little bit of time, but we've done all the hard work for you, and put it just into something that's consolidated and easy to approach. So those are options for learning more about gamma. I mean, you can get as complex as you want with it, but really we just want to know how to use it to take trade setups. So you don't need to get too much into the complexities of it. But we've got a lot of materials. I have a lot of materials in the futures channel, and a lot of videos on YouTube that have a little bit more information, depending on how complex you want to get. So the looking over some questions here. I mean, you can change the colors to whatever you want. I have them just based on what makes sense to me. But all you need to know is you can positive gamma is blue for me. And you can make it whatever color. You can completely customize this dashboard and make it whatever you want, as long as you understand what positive gamma means. So you can make it a different color, but just understanding what is price likely to do in positive gamma, and what is price likely to do in negative gamma. And the difference in those is just telling you that dealers hedge differently in positive gamma. So if the overall environment is in positive gamma, it just means that they tend to stabilize price, and they hedge. They sell the underlying a little bit when price moves higher, and they buy the underlying a little bit when price moves lower. So it tends to be smaller overall volatility, and it does tend to trend into positive gamma nodes, especially if it's in a combination with supportive. Whereas in negative gamma, dealers will hedge in the same direction as price. So if price is moving down, the dealers will also hedge by selling the underlying, which means that in negative gamma, you can get much larger, quicker moves. So they typically amplify the momentum in whatever direction the price is currently trading. And so that's the difference in those. But as far as the actual colors, you can just make it whatever you want, as long as you understand the difference between the two. Also, yeah, the Gamma bot. We have a Gamma bot in the TWI Pro um, Discord that receives updates from options depth 3 times a day, and it's these screenshots of the current environment at that time. And so you can use that to understand where's the gamma peak at that time, where is the flip line between positive and negative gamma. You can see on the left here that if we're currently in negative gamma, we have a flip line above us that's this black line. That's the line between that divides the zones of positive and negative. And like usually, there's multiple factors, but it tends to be a rejection point. You can see we're having trouble moving higher currently because we're sitting right underneath the flip line between positive and negative gamma. So there's different ways you can use it. You can know that there's a bit of a ceiling above us right now at 7,025, and so you can that could potentially be a rejection spot. You can use it as somewhere I need to trim my longs into that area, because that could be a potential ceiling on the day and it's a rejection point. So there's lots of different ways to use that information. If you're about to go long on something, you don't really want to go long directly into that spot, because it may have trouble getting continuation up through that. So there's lots of ways to use it, but it's just giving you 3 times a day in that channel. it's showing you a screenshot of the current gamma environment that we have. Yeah, so end of day moves can be a little bit challenging, especially in today's environment, because we have two things kind of conflicting. As long as we're above 7,018 or so into the close, we are still in that supportive zone, which does mean that dealers are passive buyers into the close, which typically helps us to move higher into the close. And usually it'll come down to what the MLC algo ends up doing. But the issue is, so typically that would favor a move to the upside. The problem is that we have to also know that that gamma flip line is above us at 7,026 or 27. So we kind of have two things fighting. It may be difficult to move above 7,026 into the close. If you are able to break 7,026 into the close, that would favor continuation higher, because then we would be breaking through that line where we would be pulled. You can see this really strong positive gamma node at 7,050. We would have a little bit of pull towards that, and we would have passive dealer buying into the close. So if you can clear 7,026, you could see a move higher into the close. Typically, it's going to be difficult to break that, but it is possible, especially on the MOC algo. Typically, that gives you enough volatility to break through something like that. But today's fairly complex, where we have that little ceiling above us, which is kind of holding us back from seeing a larger move into the close so far. All right. So again, not trying to keep this extremely long. Just want to highlight, some of the ways that it's really helpful to us, both before the market opens, in an idea of what's the general roadmap and potential trend and targets for the day, and then specific trade setups that it provides us with intraday. So, any final questions? And we can probably wrap this up. And I'll give one final update on the heat map before I turn this off. Okay, so again, the main thing right now is we're kind of pinched between two different things here. We should be able to hold 7,018 as support into the close. That's the bottom of this charm flip line, and 7,020 is a very large short gamma node that's also trying to hold us up. However, we've got the gamma flip line above us. So typically we're not quite so pinched between two pivots like this. So that's kind of a ceiling at 7,027. So it's very tight spot here into the close. And your acceleration to the downside, you can't really see acceleration to the downside until this 7,018 or so area fails. And you can't see continuation to the upside unless you clear 7,027, like we talked about, that gamma flip line. So your upside thesis into the close would be clear 7,027 to 30, and you could see a spike higher into the close. If you fail below 7,018 to 20, that would be back into negative gamma and suppressive, and you could see a little bit of a flush into the close. So those would be your two areas to watch, and your two different possibilities for upside or downside into the close. So anything else, you can continue to put questions in the chat. I'll still answer those, but I will stop the stream and see. Space Monkey may want to take a late day SPX trade. So I'll hand the stream back over to Space Monkey. We may switch back to the pro stream after this. But thanks for being here. And again, that TWI bundle with options depth, an incredible opportunity to have both of these services in priced discounted price in a bundle price. And again, this is something that I watch all day long. That's extremely important for my trading specifically, and has really changed the way that I trade. So thanks everyone for being here, and we'll do more of these in the future.